In the midst of the modern financial noise, one word keeps echoing across every feed: Bitcoin. This digital currency has become a symbol of a new kind of freedom in investing. No banks, no governments, just networks and code. So promising, so futuristic. Yet behind its dazzling appeal, there's a darker side that's rarely talked about. Imagine this. You buy a stock. Every year, the company pays you dividends. Slowly, money flows into your account. Or you buy a property. It gets rented. Month by month, you receive payments. Steady, real. A constant stream like a heartbeat in your financial system. Now compare that to Bitcoin. You buy it and wait. No dividends, no rent, no passive income. Just numbers bouncing on a screen. That heartbeat is gone. The money you've invested stays frozen in a system that gives you nothing back, unless its price goes up and you're lucky enough to sell. They call it digital gold. But gold can be worn. Bitcoin, you can't touch it, can't use it, and can't benefit from it unless you let it go. It's not a productive asset, just potential, not actual. Some people don't mind that. They enjoy the speculation. But for those who seek stability, cash flow, and predictability, Bitcoin isn't the answer. It may be seductive, but it can quietly drain you of breath in a game that not everyone understands. But this is just the beginning. What comes next will show more clearly why this digital star can become a financial storm. If you've ever seen a Bitcoin price chart, you know what it's like to watch wild waves in a storm. It rises like a rocket, falls like a stone, all in a single day. No clear pattern, no guarantee of stability, just fluctuation, endlessly. Imagine buying Bitcoin in a rush of excitement, riding the wave of good news online. Then overnight, it drops by 20% because of a single tweet from a public figure. Not due to company performance, not based on reports, but pure sentiment, speculation, whim. Now look at stocks. Yes, they rise and fall, but you can analyze a company's performance. You can track industry trends. Even when prices drop, you still hold part of a business that generates revenue. There's logic behind the numbers. Or take property. Sure, real estate can decline in value, but a house still stands, can still be rented, still be used. Its function remains even if its price dips. Property doesn't vanish because of a viral headline. Bitcoin isn't like that. It floats without a tether. No profits, no product, no physical backing, just belief. One day the world believes and it soars. The next day they panic and it crashes. If you're not used to waves like that, you get tossed around, dragged under, even drowned before you realize what's happening. But the scariest part isn't the storm. Sometimes, it's the stillness that follows, the silence that makes you question everything. Every time someone buys a stock, they own a piece of a company. There's a factory, a management team, products being sold, customers buying, revenue growing. All of it can be measured, traced, valued. The stock has something tangible behind it. Same with property. A house has land. Land has location. Location has value. This is the strength of real estate. Even if it's not rented out, it still serves a purpose. It has form, function, presence. What about Bitcoin? Bitcoin has no office, no marketing team, no product being sold. It's just code in a network. Invisible, untouchable, without physical form. Its value doesn't come from assets or income, but from belief. Belief that can build or disappear at any moment. When you buy Bitcoin, you're not buying a business. You're not buying land. You're buying into the market's trust in something you can't hold. And if that trust fades, the value you hold dissolves. Slowly, or instantly, like mist in morning light. Stocks may crash, but companies can survive. Real estate can lose value, but land remains. Bitcoin, when no one wants it anymore, it has no spine, no structure to hold itself up, can fall to zero, and there's nothing you can do to stop it. This isn't just about technology. It's about philosophy, about the essence of value, and how we, as humans, choose what we believe is real and what just appears to be. But the real danger doesn't always come from the market. Sometimes it comes from the shadows behind it. the ones that rewrite the rules in a blink. In traditional investing, there are fences in place. Stocks are watched by market authorities. Properties are bound by land laws. Everything is recorded, audited, protected. If something goes wrong, there's legal recourse. But Bitcoin lives in a fog. No country truly controls it. No central bank regulates it. No headquarters you can walk into when things go wrong. It's free, maybe too free, and that's where the problems begin. Many governments still lack clear laws. Worse, some suddenly ban it. Overnight, a government might declare crypto illegal. Access gets blocked. Exchanges shut down. Investors left in limbo. Elsewhere, the rules keep changing. Today, it's allowed. Tomorrow, it's taxed heavily. The next day, strict identity checks are imposed. All in a gray area with no stability. And who protects your investment if the law hasn't picked a side? Buy a house and you get paperwork. Certified. Legal. Buy a stock and your holdings are tracked, insured, auditable. But if your digital wallet gets frozen because of a law you didn't know existed, or worse, if you fall for a scam across borders, who do you call? Bitcoin offers freedom from systems. But freedom without structure often becomes chaos. And when chaos hits, only those who understand the digital labyrinth can make it out alive. Yet the deepest threat doesn't come from outside. It comes from within, from something invisible, something that sneaks in every time you open your investment app. Night falls, the phone glows, the Bitcoin chart twitches, up 1%, down 2%, your heart follows. Every second feels like a decision. Every price swing urges you to act, or doubt, or panic. This is Bitcoin's quiet battleground, not in the markets, but inside the mind of its holders. Bitcoin isn't just an asset, it's an emotional trigger. Excitement, greed, fear, regret, all cycling rapidly. There's no pause, no off switch, no market close. It runs non-stop, day and night. Whether you're working, sleeping, or on vacation, it keeps moving. And somehow, so do you. Stocks may bring anxiety, yes, but at least markets close at the end of the day. They give space to think. Property, even calmer. You don't see your home's price change every 5 minutes. No app sends alerts 10 times a day. With Bitcoin, it never stops. Notifications steal your rest. Chat groups feed your worries. One influencer's post can shake your confidence in an instant. And in moments like these, choices aren't made with strategy. They're driven by impulse. The fear of missing out. The fear of being left behind. The fear of losing everything. FOMO, they say. But it's more than that. It's a quiet addiction masked as ambition. When your investment affects your sleep. When your mood rises and falls with a price chart. When you no longer know if you're managing your money or it's managing you. That's when you realize this isn't just an investment. This is a private war. And the battlefield is you. But the most irreversible risk isn't emotional. It's practical. A single mistake, and everything disappears. Picture a vault. Inside it, your digital fortune. But the key is a string of characters. Complex, unforgiving. Lose it, and the vault is lost forever. No backups. No recovery. That's Bitcoin. You could hold millions in crypto. But forget your private key? Make one typo? Lose access to your wallet? It's gone. Not frozen. Not paused. Gone. Forever. It's happened. People have lost fortunes because they forgot passwords. Hard drives failed. Recovery phrases were misplaced. And unlike banks or brokerages, there's no hotline, no help desk, no reset button. Stocks sit in a brokerage account. Forget your login? Just reset it. Property has records, lawyers, notaries. But Bitcoin, it doesn't forgive. Not even the smallest error. Then come the predators. Hackers, scammers, malware, fake links. A single click can drain your wallet. And once it's gone, it goes to another wallet you can't trace. Your funds vanish into the dark. Bitcoin gives you full control, but it also makes you fully responsible. No safety nets, no third parties, no legal shelter. And here lies its greatest irony. The moment you feel most in control of your wealth is when you might be most exposed to losing it all. Hit that like button if this video made you think. Drop a comment and let's talk about it. And subscribe so you won't miss what's coming next.